I'm going to be going over this trade and how I was able to catch this quick 1 to 4, which could have been 1 to 10 plus. But it's fine, made my profit, and I'm going to break it down now. So what we can see is price had these lows, we respected it, we made our move to the upside, okay? Now we had this massive impulse candle, so we can see price is coming down very clean, lower lows, lower highs, it's very smooth, clean price action. And now you can see we had liquidity on the left here, right? Now at first price came down and it was hesitant, so we built up a lot of liquidity here. We had this was before Asia, this was pretty late into this was after New York, so not that much volume, but built up liquidity, and then price was finally able to come down. Okay, now price had come down, and this was from earlier today where I was able to catch a long. Now price was able to take out that liquidity, create high lows, and shift in market structure. Okay, so we made an aggressive move to that upside, taking out all that internal liquidity, and then you see it again. We're building lower lows, lower highs, lower lows, lower highs. Price is respecting its trend. It's making its move very slow. Now what I'm expecting is price to have a reversal. Now we can see from the candles price action that price doesn't necessarily want to go down lower. It will have a retracement, which is this, before the move to the upside. So slow candle movements, you can see it's not as aggressive. You can tell the difference between bullish price action and a trending price action. So this is bullish, this is trending. Okay, now let me delete that. Okay, we can see prices slowly making its way down, and then what do we see here? We have a 1 minute point of interest over here. So point of interest is in this case a bearish candle before the bullish move. Now you can see that bearish candle there, and what do we see here? All right, also before I get into what we see here, what I like to do, what I do all the time, is I scale between different time frames to get a better entry. So in this case it was a 1 minute point of interest. I'm like, okay, let's drop down to the 100 tick. This is a 1 minute, right? So 1 minute point of interest, drop down to 100 tick time frame. What do we see? Same thing, 100 tick point of interest. Okay, now what happens here is very important. So this is where price action comes into play. Your knowledge has to be pretty advanced to understand what's going on here. So price is trending to the downside, and then you can see momentum is slowing down, and what do? We build up this internal liquidity right above this point of interest. So what price is saying is, okay, we want to react off of it, but we haven't tapped it yet. Okay, so this is basically foreshadowing what's gonna happen. So it's like, okay, we're getting bullish pressure here, but we haven't tapped it yet. So what are we gonna do? We built up liquidity. We're gonna have a pullback tap into that point of interest for that move to the upside. So that's basically what price did. I was able to catch a pretty solid move. It's like, I forgot how much it was, something like that. But yeah, that's basically it. Very simple. Liquidity, point of interest, understanding what price wants to do in the long run. So a lot of people here would have been like, oh my gosh, like price is trending to the downside, we're going to look for sales. But no, you are not understanding price and what it wants to tell you. You can't look. That's why when people say, oh, like top-down analysis, I don't really support that. I support going back in time and understanding what price is doing, yeah. But if I look at the 1 hour time frame and I'm like, oh shit, like this is bearish, I want to sell. No, that's dumb. That is dumb. You have to adapt. That is the key to trading. Adapt. Okay. Now, adapting to what price is showing you, what the candles are showing you, the wicks, everything in the moment is what's gonna give you your bias. So that's basically it.